Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's Thursday, May 23rd. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So yes, I said Thursday. This is Thursday. You know, my podcast always gets published on Wednesday. So why am I doing it a day late? Well, I just took a vacation with my family. The first vacation I had with my family in 2 years. I then going to Disney every now and then, which is about 2 hours away, throughout the year. But it's our first vacation in 2 years because it's been very busy opening the business with Curzio Research, launching a security token offering where investors get an equity stake in my business. That required a lot of time and effort since it's the first time ever where investors get an equity stake in a financial newsletter publisher through a security token. But I need to get away with the family, right? It's why we work so hard. It's why we do what we do, right, for our families to make things better for our kids. And we have an equity timeshare thing in the Dominican Republic, and it's at the Hard Rock Hotel. And it's something like we bought it about 4 years ago. You get 15 weeks, all inclusive. You can use it anytime. And it's an international timeshare where we can vacation at several different Hard Rocks pretty much all over the world. And I wanted my kids to experience what it's like outside the U.S. because, most kids these days could be super spoiled. Good my kids, everybody's kind of spoiled. But, they have phones at 13, 14 years old. They have access to social media and rant and rave about everything. They drive in cars at 17. Usually wearing the latest line of new clothing and stuff like that, and hip clothes. In the real world, there's people who don't have access to clean water. There's people who don't have access to food, to doctors, and I want them to get a better understanding of the world, how, they're very fortunate to be living where they're living in the U.S., and just to put things in perspective, right? Not take things for granted. And it's just something I want to do with my kids. Not that everybody has to do, but so I made sure I got something international where we can go at least once a year, but I haven't gone in a couple of years because everything's been busy. And we did it where our kids were in school. We made sure that they did a ton of work the weeks before because this week just made sense because it's going to get very busy for us over the next couple of months as well. So anyway, the Hard Rock is in Dominican, located in Punta Cana. It's an awesome place. It's on 20 acres of beachfront property, has 12 major pools, right? So for adults, kids, partying, hanging out. Yeah, the kids' pool has water slides. There's food at every pool. There's liquor, there's drinks, whatever you want. There's over 20 restaurants you can eat at. Serve everything from Italian, Mexican, Brazilian, buffets. You get snacks, 24-hour room service, whatever you want. So everything is free with the all-inclusive membership, almost everything, right? Except for excursions and things. And so we've been going for 5 years now. We went for 4. This is our 4th time, but we missed a year. So it's just a really cool place to go. You say, well, you have all access to all these other places. Why go there? Well, they have this kids club where, you can drop your kids off and there's like 10 different girls that take them everywhere, all over the place. They do big contests. They take them to Michael Jackson shows and stuff because there's a big theater there. They take them to the pools, lunch and dinner. They do arts and crafts, arcade video games. And we know like 4 of those girls have been working there over the years. My daughters love them. My wife keeps in touch with them through Facebook. So my kids immediately, as soon as we get there, want to go to the kids club. And when they're there, we can't get them out, right? They're open from like 10 a.m. to 11 p.m. We can't get them out. They don't want to leave. And we go on these vacations, say, we want to hang out with the kids. We actually feel guilty, but I guess our kids maybe just don't want to hang out with us because they're having so much fun, and eventually pull them away and go on excursions and stuff like that. And they also have a casino there where, my wife likes to play the slots and we'll play and go to dope pools. They have shopping, relaxing. Again, it's just a really cool place. Now, this time around, things were going great. They have 7 days and things were going great until the last 24 hours. So we're talking Monday night and we're leaving on Tuesday noon to come back. So I had the podcast planned for Wednesday, great guest, everything coming up in a minute. But Monday night, my little one, 8-year-old, starts having bad stomach cramps. There's one with Crohn's disease, so I just figured out, we're watching what she's eating. Again, international, but they have great food there, right? She's been there before. So all of a sudden, she starts throwing up. I'm like, okay, maybe it's just one time. Maybe she ate something bad. Again, with Crohn's and stuff like that, she has kind of a weak stomach as it is. But then she started throwing up a few more times during the night. I said, okay, let's see what happens when she wakes up. Woke up Tuesday. Our flight leaves at 12. 6, 7, 8. She's throwing up like crazy. So we basically called the doctor at the Hard Rock. That doctor diagnosed her with food poisoning. So she get to the hospital right away, which is like 20, 25 minutes away from the hotel. They take blood tests, confirm that it's food poisoning, and she can't keep anything down. Even if she sips water, she's throwing up, right? So the doc told us, listen, we got IVs in there, which is very important, right? Because when you got to be dehydrated, and she really couldn't drink anything or eat anything. Said, it's smart to keep her here 24 hours. And they were right. So they had an IV in her. She started getting better. She wasn't throwing up. She had, diarrhea and everything. But anyway, we had to cancel our flights. JetBlue, I always tell people about the horrible stories of airlines. JetBlue did a great job. I don't get insurance for airlines because every time I've done it and 3 times I needed it, it's a massive, massive, massive process to get your money back. I'm just like, forget it. It's not even worth it. You don't go through the airlines. You go through insurance. You got to go fill out a whole bunch of paperwork, whatever. So they actually transferred everything without any fees. I guess they heard in our voice, say, listen, we had no choice and whatever, but they did a good job. So we were able to transfer, that over through JetBlue. And so now we're at the hospital. And before we left for the hospital, we talked to the manager and they said, hey, don't worry about the room. Everything's cool. You guys are good. You have the room. We're like, fine. Okay. So at the hospital in the emergency room, pretty much for 5, 6 hours. And then from the emergency, she gets transferred to a regular room, right? So again, now she has IV and she's okay. And, my wife's hanging out with her the whole night. I have to go back to the hotel, pack everything, get everything in order. I take my other daughter back with me. And when I go back to the hotel around 5, 6 p.m. now on Tuesday, again, at the hospital the whole time, we left without taking showers, all wreck, whatever. Now, the place sits on 20 acres. So when you walk to your room, it's almost like 3/4 of a mile. So I go all the way to the room. The hotel key doesn't work. I got to walk all the way back. Again, I have to spend the whole day in the hospital. Go all the way back. I said, I have to wait online. A lot of people checking in. And I'm waiting online for a good half an hour. They said, the key doesn't work. They said, well, your room's no longer available. I said, well, my luggage is in there. Told them the story. Manager comes out and says, well, okay, we put a hold on the room, and this is what we're going to do for you. We're only going to charge you half price for today. And we're only going to charge you $550. That's their half price rate. Again, I don't know, because we bought a package and we get the whole week for free for another 15 weeks. We're fine. It's like a VIP membership. We paid a lot of money for, whatever. So they say, okay, we're going to do you a favor. We understand your daughter's sick, $550 stay extra night. This is where things get interesting. So I was like, are you kidding me? And my daughter got food poisoning eating your food, right? We ate all the food there at different restaurants. We didn't eat any place else, which I'm okay with, right? Restaurants have that. I've seen good restaurants have it, bad restaurants. We've been there all the time. Everything's been good. And just something that, whatever, bacteria on it, whatever it is, fine. That's okay. But I'm here one extra day because of you. I'm not here using your facilities. I'm not here using your pools. I'm not here using your restaurants. I'm at the hospital all day. Have to pack my luggage, trying to get some sleep because none of us slept because my daughter's basically throwing up the whole night. And they were like, well, sorry, that's too bad. Maybe she didn't get sick from eating our food. I said, are you kidding me right now? I said, your own doctor diagnosed her with food poisoning. I said, we only ate here. There's no place. You can't really go outside the facility. You don't go, everything's inside the facility to have everything. Tons of restaurants. That's where you stay. And they're like, we don't offer free rooms. And again, that's all hell broke loose. Now, look, I'm not looking for a free handout here. But the room at the hospital costs $1,800, which my insurance company is going to cover the emergency part. But the fact she went to another room, they might not cover that. I'm not too sure, right? We'll talk to the insurance company. Hundreds of dollars in cabs getting back and forth. I got lucky I didn't have to pay anything to transfer my flight on 4 hours notice before we were supposed to be there, right? JetBlue did us a big favor. Doing the podcast one day late. My older daughter's supposed to be here on Wednesday because we're supposed to fly in on Tuesday. She gets braces Wednesday. Cancel those appointments. We have to reschedule. They're also going to miss an extra day of school. Which again, made sure we did tons of work weeks before so they can go away with us. Never take my kids out of school, go on vacation. Again, we just haven't gone on vacation in a while. I want to spend time with my family. But I went off on the first guy I was talking to. So then he grabs the manager, and she sits with me, and she's like, well, that's all we could do for you. And it's a great deal. And I said, I have a VIP membership here. This is the 4th time I've come here. My wife and I go on tons of excursions with the kids, which you have to spend extra money for. We gamble at your casino. And despite being all-inclusive, we spend a lot of money here. We do. Buy lots of stuff, have fun. Now, I told him, you have the opportunity to do the right thing here. And the only reason why I need the room and I have to stay an extra night is because of you, because my daughter got food poisoning from eating at one of your restaurants. And you're going to charge me for it? And she said, that's all we could do. So I basically, in a nice way, told her that she's an asshole. And I'm going to sell the membership, which I got tons of offers for, since they only had like 3 Hard Rock hotels you can go to when we first bought this membership. And now they're like 10. So we tried to buy it and said, hey, if you're interested in selling it, you could sell your membership at a big profit and this and that. No, we liked it there and everything. But it's a company. It's a hotel that made tons of money from us. We put a lot of money up front to buy this whole package, which if we go 15 times makes sense. But if we don't go, then it would be expensive. And for $550 for the room, which by the way, they said it's 50% discount. I'm not too sure. Again, we buy the whole week we bought the week's pre-time. There's well over 1,000 rooms at this place. So they're making $100,000 every night, but they didn't even care. And I'm not here to rant in the opening, right? I mean, everyone listening to this has their own story where they had a terrible experience traveling, on vacation, buying something, whatever. I get it. So I know you can feel me right now, and everyone has their own stories. But there's something much bigger to this. Because I've been doing business for 25 years, right? Been different companies throughout that career. You guys know, you follow me, especially over the past 11, 12 years I've been doing this podcast, and I tell you guys everything. Up to about 5 to 7 years ago, shit just changed. It just changed. I mean, what the hell happened to people just doing the right thing? Because there's so few people and companies that do that these days. It's like the contracts I signed with past employers before I got this job. 2 of them basically lied to me. And you know what? Those 2 businesses are doing absolutely terrible. One saw its stock crash since I left. Why? Because I wasn't the only employee that they screwed over. And the other closed their division as soon as I left. Imagine if they did the right thing. The franchise that I have today could have been under their umbrella if they just did the right thing. They just treated your employee the way you're supposed to. You didn't lie to me. You didn't try to steal money from my podcast and tell me you're going to pay me something and didn't pay me. Just by doing the right thing. Like, what happened to that? Instead, it's all short-term bullshit. Like, how can I make a ton of money off this person over the next year or 2? Well, you know what? To those 2 companies, look how that turned out for you. I mean, partnerships back in the day. I mean, it's like McDonald's and Coca-Cola. It's great for both companies. They're partners forever. Nike, Apple, GoPro, Red Bull, Apple, MasterCard. I mean, even Best Buy recently partnered with Amazon. But it's got to be a deal, for partnership that works in both of your favor. And if I sign a partnership with someone and I'm benefiting 90% and they're benefiting 10%, and they're bringing a lot to the table, then I'd restructure that deal later on and say, hey, let's make, because this is a great deal for both of us. Otherwise, that person's going to be like, hey, you know what? It's not a good deal for us. Let's leave. And, you ruin the partnership, especially if the partnership could be like a Coca-Cola McDonald's, something like that. Just a strategic partnership that benefits both companies. I have my own business. My name's on the door. And we're starting to partner with a lot of companies. And every time I sit down with these companies, I say the same thing. It has to be a 2-way street. Let's come up with a long-term plan. Get my name's on the door. I want to partner for decades, not the next 6, 12 months where we screw over people. And I promise, I'm not going to be the one that gets screwed over. But what happened to this? Like this whole model, because this has happened over and over. And even the business deals that I signed, companies that I worked for in the past, seriously, maybe over the past 10 years, it's been so bad. Like people screwing each other royally, especially in our business. When I see our business, financial newsletter publishing business, it's a small business. We all know each other. It's not a zero-sum game where, I'm going to be able to take all the business away from my competitors. No, you can own my newsletters and own their newsletters. It's like watching a news channel. You're going to watch CNBC or MSNBC, NBC, or you'll watch Fox Business News and Newsmax, whatever. You don't have to watch one or subscribe to one. We know the numbers. People subscribe to a lot of different newsletters. And if you partner, we could all do well together if we do the right thing. But even in our business as well, you see people just backdoor people. I don't get it. I never understood that. Like if it doesn't work, it doesn't work. But why screw over someone when it's going to give you a bad name? That person's going to tell 10 times more people than even if it's a good partnership, right? Because people love to talk about the negative stuff and post on social media and all that stuff. But it's just crazy. It's like absolutely insane. You go to Dominican Republic, they had to do the right thing. It's not that I wanted, it's not the $500. It's we stayed an extra day because my daughter got food poisoning because of you. I'm in the hospital 24 hours. You think they'd be like, hey, you know what? You've been coming here for 4 years. You're going to come here for another 10 years, spend plenty of money, which the $500 is meaningless to you with the amount of money we'll spend over the next 5, 6, 7 years. Because we really like going there. Maybe we go to a different one. Again, it's all under the Hard Rock. But really, and I told him, you had the chance to do the right thing. If I had to guess, I'm probably a top 5% customer there. I've been there 4 times. Most people go there once. They go to different places. You had the opportunity to do the right thing, and you didn't do it. And now you're going to lose a client. But think about that, guys. If you're opening your own business, if you're doing that, I mean, if you want long-term partnerships, you want things to work, think long-term. Don't think short-term. And you're going to screw this person over. It just doesn't make sense. Look at big companies. Big companies, they don't screw over those little guys all the time. They have, Apple has deals with suppliers. Walmart has deals as well. Yes, the deals are going to be in favor of Walmart and Apple because they're bigger companies, but still you want the partnerships to go long term. The volume that you're going to do with those people are incredible. But I just don't understand how people do this. Happens so many times to me, to friends, like just do the right thing. I mean, Curzio equity owners. I have a person who emailed me who came in for a $25,000 membership, which entitles you for 2 years to all of our services for free. If you come in for $100,000, you get everything for free for life. And this is a person that's unbelievable, like just a crypto analyst. Love him. He always comes up with brilliant ideas, talks to me all the time, really deep, hardcore research. And I told him, I said, you know what? He came in for $25,000. And I said, look, I'm going to give you the membership for free for life. And he's like, thanks. I said, no, thank you. You give me a ton of research. Now I have a person I can rely on that if there's something, remember, crypto's a crazy world. There's something I don't understand. He'll answer me right away. We still talk. We send emails, once a week or whatever. But now you have a contact for life who could help me, not only help me, help my subscribers to my crypto intelligence newsletter. I mean, that's the way things should be, right? When you do the right thing. But I don't understand why that happens. I mean, email me, frankcurzioresearch.com. I'm interested to know more. Again, guys, it's just, I want to hear stories from you. Because I see this all the time. I'm engulfed in business all the time. I talk to so many people. I have a very big network. And time again, I see this. Where people are just getting screwed and they get screwed. And it results, I'm telling you, the people that have done this, even in our industry, you're seeing their business decline now. It happened to me at a company I worked for previously, a while ago. And now it's gotten around that I wasn't the only person they screwed on the way out. They screwed a lot of other people. Now nobody goes there. It's reflected in their stock price. It's crashed completely. And it's horrible because they lost a lot of talent. They screwed a lot of people over. But again, so the long-term business model just is broken. That's why your stock is terrible. That's why your company is terrible. But I just don't understand why people don't do the right thing. Anyway, a little bit of rant there. But now I'm back in the States, taping this from my office in Florida. My daughter's still sick, not throwing up anymore, has bad stomach cramps. And that poor kid can't catch a break, but she's doing okay. She'll probably be better the next couple of days. But that's why I'm taping this podcast one day late, which I apologize for. Since I always publish Wall Street Unplugged on Wednesday and try to never miss a week. So we didn't miss a week, but it got published a day later. As for my guest, it's the one and only Andrew Horowitz, who was nice enough to be very flexible since we were booked yesterday and everything's going to get scheduled and do the interview yesterday. And he was able to say, hey, you know what? I'll do it for you today, which is really cool. Andrew is a founder and CEO of Horowitz & Company, where he manages money for individuals and institutions. He's also the host of Disciplined Investor Podcast, which is the second best podcast on iTunes in the business section. I always joke. Actually, Andrew is probably, pretty sure this is a fact, the only one in the business segment that's been doing a podcast longer than me. By around a year, I think. So I've been doing it, I think I'm on 12 years now. And it may be more out there. I just haven't seen it, but I know most podcasts have popped up over the last 2 years, getting very, very popular. We were doing it when podcast was not a real medium. Now it's every place, on every website. Everyone's doing podcasts. It's just amazing to see this grow and, our audience grow as the industry grows. But Andrew's going to break down the latest on the trade war with China. It's going to be a good conversation, guys, because we have a different opinion, which I always like. Don't look at it as like, oh, I'm going to listen to. Just listen to the positives and negatives. It's good. You can agree with him, agree with me. You're an investor. The best thing for investors is get both sides of the story. Not just one. There's going to be a great conversation. It's going to talk about what kind of impact, if the trade war continues, and what kind of impact it's going to have on our economy and individual stocks. And we're going to break down the recent earnings season, which is over now. A little bit better than expected, but many companies who offered guidance were very conservative. Not a lot of companies raised guidance because a lot of those companies came on their conference call and said, look, we're not really factoring tariffs. There's a lot of uncertainty in the market right now. We know uncertainty is not good for stocks. Does that mean the market's going to fall even more? Andrew's going to let you know. Okay, it's a fantastic conversation. And of course, he's going to share some of his favorite stocks to buy and several shorts. He's going to share at least 10 ideas with you. So a lot of great ideas, which I know you guys love. And you know what? Let's get to that interview right now. Andrew Horowitz, thanks so much for joining us again on the podcast.
Hey, Frankie, what's going on there?
What's going on in the North? I'd say what's going on everywhere. I mean, the trade wars, right? I mean, it's dominating the news. We've always had a little bit of a difference of opinion over this pretty much over the last 12, 18 months, where I argued that China has no choice to do a deal with us. Of course, they have to save face, put up a strong united front, but at the end of the day, if they don't do a deal, they're going to fall into depression, which we kind of saw in 2018 as a market crash by more than 20%. But at this stage, I'll be honest with you, I thought a deal would have been done last year. Now we're pushing, we're going further and further into 2019. What are your thoughts now? Because it is moving the market a lot on a daily basis. What are your thoughts on the trade war? Should investors be concerned like long-term and say, okay, we have to restructure our portfolios? Or should we just get out of the market to see what's going on? There's a lot of uncertainty out there.
So let's get a couple of things straight. So over the last 18 months since we started talking about this, it is the whole thing has changed. The dynamic of this trade war has gone from a skirmish, a kerfuffle, a disagreement. So I think we both agree now it's a trade war, right?
Is it a trade war? I wouldn't go.
No, wait. If it's not a trade war, how do you define a trade war? Because this is the thing that's going on. First of all, I don't really know if the label means anything per se, but when we're going off after Huawei now on the other side, we're arresting their people. When we're going directly to tariff everything and kind of look at to try to crush their economy, I don't know, and they do retaliations on our companies, and we're starting to see all the ramifications from this. I just don't know what else you want to call it. What's a trade war if this isn't a trade war?
Because right now, I think there's still potential for a deal. There's a lot more where it's not all out, 25% tariffs on everything, blowout. We're not dealing with China at all. Yes, they stopped talking for the past week or so. But for me, it would have to be official where China's like, we're never, ever dealing with you, the hell with you. And the U.S. where it's actually set, where even the companies, and this is where it's difficult, they reported decent earnings season. I think they declined a little bit year over year, but we had a great year last year. But they all offered guidance, and a lot of these companies didn't, even the ones who offered inline guidance, positive guidance, they were all conservative. And I've heard it so many times in the conference calls where we're not too sure what's going on with tariffs, and that's not factored into our estimates. When they're factoring into the estimates, that's what I'm going to say there's an actual trade war going on until the U.S. and China say, listen, there's no negotiation no matter what. But for me, I just think for both of these economies, I think China would get hit a lot harder than we would, of course. And we saw that with the numbers. Their market declined by more than 20%. Ours fell 6% last year. This year, they were up more than 30% when things were going good in the first through April. We were up around 13%, 14%. So, and now it fell.
Wait, Frank, let me just interrupt you. The reason their economy went up, and ours to a degree, was yes, there was a hope for a resolution of some sort. But on the other hand, really, it was the stimulus that was pumped in, the massive amount of stimulus. As their economy was coming down, the GDP was softening, the exports were seeing problems, domestic issues were happening. There was a massive amount of stimulus that was put forth by China. They're usually, historically, they've been very quick to start putting things back in. And our Fed did the same thing in the beginning of the year. If that didn't happen, we'd be in a much different boat right now. However, I'll go with you with the fact that, okay, a trade war is we'll say a stop, like a work stoppage, right? A trade stoppage. Mm-hmm. But, we're getting to the point that we are now seeing that there is a real fight brewing. And I really do question how far we really came to an agreement versus a lot of rhetoric. One of the things you have to understand, Frank, is that you've been to Asia, right?
Yep.
There's a much different culture there than there is here. And they're saving face. They've been conquered. Has the United States ever been conquered? Never.
Mm-hmm.
How old are we? 200 and something years old, right?
Mm-hmm.
Asia, those countries have been conquered. They have vowed never to be conquered again, whether it's by trade or by actual boots on the ground, people coming in. And China's been conquered. And, they've had various times in their history where parts of China or, areas, and, Japan came in the last time and really destroyed, like Shanghai and a variety of other areas. They do not want to have any kind of major power that is going to have their hand on their throat or their foot on their throat. And I think that's something to be said that in this negotiation process, the way we're going at this, which is, hey, China, listen, you don't like what we're doing? We're going to raise the tariff overnight on a Sunday out of nowhere. Hey, you know what? We're going to when a deal was supposed to happen, Frank, within days, a deal was supposed to happen. And all of a sudden, you know what? 5 days before, we're going to put on an extra tariff on $300 billion potentially, and we're going to raise the 10% to 25%. It's like, what's going on here? It seems to me that our administration, President Trump, doesn't want to do a deal with them, wants to keep on squeezing them. They're not innocent either. China's not innocent either. What is that doing? Here's the problem. Whatever you want to call it, in my opinion, we have a situation, we have massive uncertainty. And I think we both can agree that uncertainty does not flow well down to stocks. And we have deals that are on, off, increases, decreases. We have bans on companies, then walking it back. We have a deal that's on, a deal that's off, and there's too much BS going on. I just don't see this as a negotiation. I really see this as amateur hour.
Maybe, but and for me, a lot of people have written into, especially because, our podcast, and I think you're the only one that's been doing a podcast longer than me, right? Maybe like a year or two longer than me. We've been doing it over 10 years.
Right.
And it's global, right? So I have a lot of Asian investors that email, and it's cool. They give me the whole scoop, and the same thing. They said the same argument, like, hey, it's very proud nation. They've been conquered. It's different now, through the years. But I have to say, I don't put that in the same category of what's going on today, because it's different. I mean, they're stealing our intellectual property. They have a massive trade deficit with us, which we could make up. We have unlimited natural gas. They need natural gas. Anything. We can make up that trade balance somehow. So the fact that we're asking them to play fair is a lot different than us going there and bullying them, which, it may seem like we're bullying them, but at the end of the day, what's going on with China and us, it has to change. I mean, it's affecting us, it's affecting our profits. And for China to really say and have that pride factor and say, you know what, I don't even care. I think China, to me, it seems like China's not doing the right thing here, and they just need to do the right thing a little bit. And the risk of them saying no is a depression. Okay, it's going to be a depression. Just forget about the numbers, because the numbers suggested 100%. But look at, China is a huge producer of our goods. We are the richest country in the world. We're going to buy the hell out of everything they sell. We'll find ways to buy it someplace else. But it's almost like an Apple supplier trying to play hardball with Apple when Apple could go to almost anybody else. Yes, it's difficult. Yes, it would require moving things around. Yes, it would be more expensive. But the whole China economy, at the end of the day, do they care? Because did you really look at the numbers last year? I mean, those numbers, when you look at housing and retail, they crashed. Everything crashed. And you're looking at an entire economy going, wait, can't we work out something? We could say whatever we want. Say we fought the U.S. They're terrible. We work out. To me, I'm just surprised none of that is really going on, where it's not like, hey, we're picking on a tiny country or we're trying to make things, to me, with the numbers, and I've been following this story for over 2 years and written 20, 30-page reports on it. We just want it to be a little bit more fair here. So when I look at what's at stake in terms of, hey, to solve this, it seems like it could be a lot easier to solve this, even things behind closed doors, than to risk everything. And the reason why we didn't see our economy come down is because of the tax reforms, right? I mean, that added a ton of money to the balance sheets, where
thank goodness
it didn't hurt us last year. If we did, it would have crushed us. But we're seeing it this year. So it just makes sense for both parties to negotiate something. But like you brought up a good point, because I love we have two different opinions on this, and it's great. But at the end of the day, we both agree this creates uncertainty. So how do we play the stock market? How do people view this? Because they're reading every single day the market's up 350, then it's up 250, it's down 350. Right. We're really only like 4% off the all-time highs here.
Yeah, it seems like a crash, of course.
But how do we play this? Is this something where individual investors who listen to our podcast for this, is it something where they need to readjust, or they go into more, sounds crazy, but small caps, which aren't going to be as leveraged to international, right? To do most of the business.
Meanwhile, I looked at the small caps just this week, and the small caps are really not doing well. compared to the large caps. I think that we've seen, once again, a move into the more, we'll say, stable companies, like Apples and the Facebooks, and those have been holding up really well. Those and Microsoft, they have a great amount of, to a great degree, they are represented in the various indices, and that's been helping. Let me just mention one more thing. Just go back 1 second. I agree with you. I think there's two sides of this trade discussion. One is the intellectual property, as well as fairness in terms of how they deal with our technology and our, IP. The other one is about this whole trade deficit thing. Don't forget who created this trade deficit with them, right? We shipped the jobs over there. We wanted cheaper goods. We felt it was better by our companies to produce and manufacture elsewhere that was much more cost efficient, because we were able to then bring it back here and sell it cheaper and sell more of it. Therein lies a little bit of a problem with that. So I don't know how that's going to solve, because we're just going to move it to another country like Vietnam or maybe Indonesia. And that is going to create another problem with those countries. Intellectual property, I totally 100% agree with the way that they are stealing things like technology, but just look at the fake products that they have. Nobody really talks about IP. They all think about technology, but look at the fake bags, the fake clothes, the fake, luggage, just all that kind of fake that they put out is a real problem for our companies as well, and companies around the world. I think we should try to tackle the intellectual property part and not worry so much about the trade issue as much. Let them make money. It's good for us too. Who cares? Seriously, who cares? To get back to your other question, what do you do? I think that there is something to be said about de-risking a little bit, because the question you have to ask yourself is, do I want to actually be out there over the near term, let's say 6 months to a year, with the potential for companies having caught the cold that's out there from the rest of the world? Don't forget, it's not just China. We got Europe showing horrible numbers across the board. Emerging markets, very questionable. So now if you want to look at this and you want to say, okay, here we are, I have a portfolio. I don't think you should be super allocated towards technology right now. I think that could be a problem for you. I think that maybe de-risking somewhat, if you want to stay allocated to equities, et cetera, or allocated to positions, that's fine. But try to move it into the more of some of the staples, higher yielding positions, looking at some of the more beaten down areas. We like, and seemingly energy has come into our portfolio recently, which I find very odd, but it has. Stay away from the super aggressive IPOs that kind of move very freely, and stay away from some of the China shares just to see when this thing dissipates a little bit here. So I think that de-risking in terms of sector allocation, in terms of the type of stocks that you're going to be looking at, staying more domestic would be helpful, although that limits you. Small caps will get hit because they are, significantly, the small cap universe is just, when markets come down, they get hit harder. They're less liquid. And, it's a whole different animal there. But I think de-risking is not an inappropriate mechanism right now, because it's no reason just to try to be a hero in the face of what could be a continuing economic slowdown, which brings me to where we are.
Yep.
So Frank, we saw a 3.2% GDP number. Looked great. Wow. Now remember something. That was Q1. They've been tinkering with Q1 GDP from a statistical basis for a while, because they were very...
It's like 3 revisions to everything. So, but the first number always is the biggest, and then nobody really pays attention to the revisions, and that could be 2.1 by the time the revisions. It's just funny when I look at the economics.
But particularly with GDP, the first quarter has always been this weird aberration in terms of the last many years. And there was always concern by the economic community about, hey, what's going on with GDP first quarter that gets so wacky and seasonally adjusted issues? What's the story? So they tried a couple of years ago to put a new calculation, and that's always a problem, into the GDP number. And here we go with this crazy number, 3.2%, which blew it out of the water from everybody's perspective. One of the things that I've never really understood about what is included in GDP, there's one particular component, and that's inventories. The greater the build on inventories, the more effect it has on GDP. Inventory builds actually have a positive appearance in the GDP number. So therefore, what we're saying here is, if companies either produce a lot, create a lot of inventories. That's good for GDP. That makes sense to me. However, if there's a big increase to inventories because maybe people aren't buying things, that also helps GDP. So if you strip out the inventory number from the last GDP number, which actually accounted for 0.7% of GDP, you're talking about still a good number, 2.5% or so, 2.4, 2.5%, depending on how you round it. But that's not the kind of growth you want to see. It's kind of like when you look at a stock, right? If you see that earnings are up just because of buybacks, that's not as good as organic growth from revenues, cost cutting to a degree, and more efficiencies, right? You follow what I'm saying?
Yeah, no, I'm following you.
So this is not a good GDP number. It wasn't a good GDP. It was fine on the outside. I get that. But there was some underlying issues that showed a lot of weakness in the economy. Manufacturing has been slowing. Retail sales have been slowing. Housing is starting to come back a little bit and stabilize. But the one thing that's been really good is employment has been just dynamic and dramatic and great. But if you look at what's happening with retail, the consumer, yes, the consumer confidence index popped back a little bit last month, and that was good. But a lot of things are starting to slow down. And when I see that, and I see what's going on, I do wonder, okay, earnings, as you said, earnings season was good. However, there was a really low bar, Frank.
Oh, yeah. No, when I say good, it beat expectations, which could be nothing, right? Because expectations, and that's what we realize with even Apple, and not to go off point here really quick, it's the reason why Apple beat their numbers the last 3 quarters is because those numbers were significantly lowered by the analysts into the, if you look at the numbers, earnings and sales are both declining year over year for Apple. People wouldn't know that because they repeat the numbers that the analysts put out there that they lowered. So if you're lowering GDP numbers and you're just beating them, it doesn't, when I say, earnings were better than expected, it means it was better than what the projections were, because we were projecting, I think, a 3% loss, and I think it's around a 0.5% loss. It might be even when all is said and done. I think like 98% of the companies report already. But yes, but listen,
and no growth is not a problem on earnings, because we've had such an incredible, like 20% plus earnings growth last quarter last year. So that's not the worst thing in the world that we didn't have earnings growth. However, we saw PEs retrofit and get right back up to 16.5 on forward on the S&P 500. And a lot of that was due to, as they call it, expansion of earnings multiples rather than earnings actually moving up. So that was one issue there. I mean, I just think that it's time that we want to be a little bit more cautious now. There's no reason to be cavalier and, balls to the wall out there. It just doesn't make sense. Our portfolio, the TDI managed growth strategy. Let me give you a quick 20-second snippet here. The managed growth strategy was a long, short strategy that we manage. We use a screening criteria to pull in stocks for a core position. There's several different components of the strategy, but one of them is a core equity exposure. We start with about 5,000 stocks. We filter it down, utilizing things like earnings growth over many, many different years, and revenue growth, and margin expansion, and ROE, a variety of things. So when we come down to that, what's interesting is we had about last year about 65 stocks that made the cut. So therefore, we had a higher exposure to equities. The last time, which was last month, 41 stocks. That's a big differential. The lowest I've ever seen is about 30-ish, about 30. I think it was about 32 maybe. Highest I've ever seen is about 72. So we're now down 40. Which means companies are not meeting the criteria for earnings growth, for revenue growth, for margin expansion. Something behind all this is a problem. And I think that really states the story really well, that why have excess exposure if it's not warranted?
Now, when you look at those 30 stocks that popped up, are you also factored in, because you said earlier that, hey, you know what, it's probably a good time to get a little defensive, whether it's consumer staples, whether it's utilities. Is that factoring in? Because I know your strategy is to look at earnings growth, but what is some of the companies that actually, not to give anything away, I know people pay for your research and stuff like that.
Giving it away, man. Giving it all away.
Give it all
Frank.
30. Name them right now. No. But what are some of those names? Are they in the technology sector? Because like you said, that's a risk too, with everything going on with Yahweh and who knows, right? With semiconductors and Apple slowing completely, which nobody's really talking about, looking at their services, even though it is an iPhone company, and iPhone sales are slowing significantly. So
So let me give you some of these names. It's interesting. We have a lot more energy in this all of a sudden. I don't even know why. We have a variety of limited part, the LPs in terms of ProPetro Holdings, PagSeguro Digital is in there. That's a digital. Trade Desk is in there now. U.S. Steel made it, which I thought was really fascinating. Let's go through here. Antero Midstream is in there now. Cabot Oil and Gas. I was really surprised. The first time Curzio Oil. This is the first time I've seen a lot of this. Devon Energy. This is the first time I saw so much energy come into this screen in the last 8 years. We also have like Canada Goose, Five Below, Copart, Microsoft is in there, Lululemon's in there, Kemet is in there, Intuit is in there, Visa. I'm just looking at those names here. CBRE Group, Cummins. I give you enough there. That's enough.
If anyone following along, so these are basically companies that are growing revenues, growing sales, I guess greater than the overall market. Is that like,
yes,
I know there's a lot more detail into it.
Well, it's more detailed than that. It also has a high ROE and has margin expansion, probably 8 other components that are showing these to be superior, quote unquote superior. Now they'll follow along the market to a degree, right? But they have better fundamentals than we're seeing elsewhere. And, these stocks, generally speaking, have done pretty well compared to the market. This is that core holding that we have. But now, like I said, we're down to like a 50% exposure on equities right now. That's much lower than we've been. So it's saying something. And we use that as always a tell on markets. Like how many stocks are making it through the screen gives us a really good tell on what's happening with the bigger picture.
Now, okay, so now we talked about the bigger picture. You talk about the companies that you like, but you also, because usually I say, hey, what topics do we want to touch on whenever we go on each other's podcast? Because, you're covering a lot of stuff. I'm covering a lot of stuff. And you actually had a lot of companies that you said to either short or avoid, which, big box retailers all reported horrible numbers. I thought Macy's numbers were actually pretty good, and they reported in line for a stock at a 52-week low. But again, that stock fell a little bit because they said tariffs aren't factored in, saying we're going to have to make adjustments if this trade war really, takes place. And, right now they're okay. But that uncertainty hurts these stocks. And you also threw out a name, Best Buy as well, that you said maybe you should short. Is it obviously consumer names there? Go a little bit more into those.
So, the big box retail, you and I have also talked about this. The mall is dead. The mall is not dead. It's back to dead again. I've been into a few malls, but it's only in my area. And they're like, what's going on here? I went to Dillard's the other day and I'm like, I think I was the only one on the floor. It was ridiculous. And they don't have sales. They don't have stuff on the racks. It's like just this, I think the big box retailers still do not get it. Now, were they oversold and were they on a theme for a while back a year ago or so? And then you correctly said, hey, they're not dead. And you had a huge run on many of these names. I think Nordstrom's is at a 9-year low as of their recent numbers. The problem is that the next generation isn't buying. Forget the next generation. I'm not buying the same way I used to buy. Are you?
No.
I buy stuff online. If it doesn't fit, I send it back.
Well, clothes are tough. Clothes are tougher. If clothes
not
I go
for
to
a
the
body
store,
like
I might
mine.
go to.
Not for a body like me.
You're in great shape. You're perfect now. But a guy like me who's on the chubby side, it's a little different. So everything extra large isn't really an extra large. Sometimes an extra large, like for Calvin Klein, is really like an extra small. So I have to go in and try these things on. But
right, yeah.
I still enjoy so if I'm going away for a trip and I just want to get a couple of shirts, I'll go to a Kohl's because at least they have like a large selection or something. But it's not like I'm a huge Kohl's shopper or a Macy's shopper. But when I do go there, I do see people there. I think that, they're trying to adjust. And the reason why I've always said the malls aren't dead is, one, if you look at Christmas time, you can't even get a space, as millions. But more important is there's a mix, right? There's a reason why Amazon's looking to open up big box stores. It's the reason why they're partnering with Kohl's. There's a reason why they might take over a big box retailer. This way, yes, one-day delivery, it goes out to 70% of the people they could reach. But what about the other 30%? You're going to need more distribution, and they can't open up another headquarters ever again in this country, right? Because what all the backlash they're going to get. They just, even if you say we're going to create $5 billion and 100,000 jobs, politicians find a way to just shoot it down, right? So even though they don't understand math, that's fine. But when I look at even Amazon, there is a mix. Of course, you want to have more online, right? Less employees, you get it. We all know that model. But the Best Buy model has worked up to this point, which is, you're saying the short, but what Best Buy does say, hey, we're matching everybody. They are partnered with Amazon, but what they make money on is their services. So, hey, you know what? You want the flat screen TV? We'll put it on your wall for you. We'll come to your house. We'll do all the settings. We'll have everything done for you. So and that's pure margin, right? That's pure profit for them. So they found ways to adjust where I still think the big box retailers are struggling, but I can't see it being completely dead considering that a company like Amazon is partnering with Best Buy, is partnering.
I agree with you.
Kohl's.
No, what I'm saying is the mall is a problem. And the concept of the mall being a location. Listen, when I was a kid, and probably we're not too far away from age.
No.
What did we do on the weekends?
Malls all the time. That was
the mall. That's what we did. You went to the mall. I mean, it's not the same thing anymore because people can get on their screens and just talk to each other and do a multiple chat, and they don't have to. They hang out like a hangout with somebody's on their phone. It's not where you have to go to the mall and hang out there and you have a little lunch and maybe a shop, and you grew up in that, and that's what you did. All I'm saying is that there are many other options that are better. Best Buy, we just looked at a technical. We're short Best Buy, by the way. We traded a couple of times recently. The earnings came out this week, and the earnings actually beat pretty well. However, they were reaffirming their full year guidance, which meant that if their earnings beat by 20 cents, or maybe it was 14, I don't remember the exact beat, something like 15 cents, we'll call it, this quarter. That means somewhere about on the back end of the year, they're going to take it off of that, right? Unless they're being very conservative. Secondly, they also said that, I think they were also talking about the tariff issue. There's some uncertainty there. Their revenues beat slightly. And on top of that, their same-store sales were up ever so higher, about 1% same-store sales growth. So, stock is, I don't know, was down 5% after earnings. So that's good for us. But the thing is, we're going to trade it back and forth here. We just think it's a little bit overvalued for what it is and the other options that are out there. However, if I was going to buy a big screen TV, yes, I would go there and then try, put them in their place and say, listen, I can get it here for that price. And they'll go, okay, we'll match. Which isn't the best thing for them because you think that they're putting out the product that needs to be the price where they make the right amount on it. But anything smaller, I'm buying somewhere else. And there's plenty of places to buy stuff these days and plenty of opportunity to price shop. And just I don't have to go anywhere, deal with traffic, deal with people that are, parking and trying to hit my car and all. Just buy it online and get it right there. So I don't hate the stock. I just don't like it. And I think it's a good play on the retail space. That is an area that we can go short. Other stuff, I don't know how much more down some of these companies can go. The Nordstroms, the Dillards, the Macy's, the big box guys. I'm not getting near those because they swing pretty hard. So the other one is Tesla. I don't know if we want to talk about this, but I've been really negative on Tesla since probably Tesla's IPO.
So you're still down like 30% of that trade.
Yeah, I've shorted a couple of times, but I really haven't. I talk a short game, but I don't play the short game on Tesla. Here and there, a little bit here and there. I think that the one thing that really troubles me the most about Tesla, aside from the fact that Elon Musk needs to stop tweeting and he needs to get some sleep, is that the biggest thing that really irks me is that tweet that he did about the funding secured. I got to tell you something. There's a lot of things that I do. I listen to his conference calls, and he's just all over the place. Doesn't make a lot of sense, and he doesn't give you any detail. He's very short-tempered with anybody that goes against anything that he talks about. The thing is that 420 funding secured tweet, it troubled me so much about this company because it was so desperate and so weird, and so. Frankly, I guess we against SEC standards, et cetera, that I'm thinking, I don't think he's fit to be a manager at Tesla. I think if Tesla, here's something for you. If he steps down from the board and from the CEO position into just an engineering or some other position, and they bring on an adult to run the company, I would consider buying the company, maybe. Otherwise, no touch for me.
Yeah, I mean, I agree with Tesla. I mean, it's coming down. You've seen slower growth. It's at a crazy valuation, right? Which is fine. We've seen Apple, we've seen Netflix at crazy valuations, though back in 2002, 4, 6, and those stocks are up tremendously. But that's because they saw earnings growth, huge sales growth, which you're not seeing right now. And the estimates are still too high. But Andrew, you brought up a good point. It's just very dangerous to short. I mean, they have SpaceX, who knows, what multi-billion-dollar valuation. I know he took over his solar company, which blew up in the short's face. So for me, I wouldn't tell people to really short it here. I think it's a dangerous short, but I think it is going lower. But again, when you short and you're wrong, you could really, really get crushed. But I definitely agree with your thesis on Tesla. It seems like it's going lower here.
Yeah, I agree too. I'm a Tesla shorter in commentary.
Listen, guys, if you're Tesla bull or bear, just go on Twitter. I mean, Twitter's amazing. I mean, they're diehards. That's all they post. It's crazy. It's nuts. But the Bears definitely been right, and you're seeing much slower growth, more competition into the market. But I wanted to go into one of the stocks that you do like, which is a conservative one. Before I do that, because we've been talking about, hey, there is uncertainty in the market. We don't know what's going on with tariffs. I've seen a lot of companies beat estimates, like you point out with Best Buy, but they didn't raise their overall yearly guidance, right? And a lot of them said, well, we don't know what's going on with tariffs. We have an election cycle coming out, right? Presidential election coming up next year. We know that people, the voters, invest with their wallets, and they're definitely a lot richer today than they were 3-4 years ago. However, if the market does happen to crash going into election cycle, it's going to be very bad for Trump. Trump has the ability to solve that by doing a deal with China. Do you see this as a risk to the thesis where, we're both kind of saying, hey, it might be good to be a little conservative here, because if he sees the market really coming down, he's going to do everything in his power, I think, to do a deal because he won't risk his presidency. And if he does do a deal, we have earnings guidance that no company is really raising their guidance significantly because there's so much uncertainty. But if we didn't have tariffs on the table, I bet you about 15% of those, 20% of those companies would have raised guidance for the year. It just makes sense to be conservative.
Yeah.
So if we solve the tariff problem, is that a risk? You think the stocks will go much higher from here?
So I think I have always been of the mindset that any deal that we do with China is going to be a watered down just deal for the sake of saying we're doing a deal, very much like the NAFTA redo. I think it was going to end with just, hey, we got a great deal, the greatest deal in all of history. And no other president could get a deal like this. And it's going to be a few things that have changed. And maybe they'll buy some more soybeans, and maybe they'll say, you know what, we won't mess with hair dryers. And we promise that, on all of our exports in the area of baby toys, we will no longer have surveillance devices on them. Something crazy like that. So I think that, yes, I agree with you that there is a political motive here that will be utilized to make sure that if markets do start coming down, maybe they'll talk about tax reform 2.0, the infrastructure deal that was supposed to happen now all of a sudden is on ice. President Trump came out this week and said that, if you keep on investigating me and you use the I word any longer and call me names and say nasty things about me, infrastructure, the $2 trillion infrastructure deal is off the table. And I'm probably not going to work with the Democrats on anything. We'll just keep on doing executive orders. So I do think, to answer your question with all of that, is yes, if we can come up with a deal, and if tariffs come off, because they may not come off even with a deal, they may use that as a checks and balance to make sure that things are done and slowly take them off. But I think that President Trump is pretty dug in here, and I'm questioning whether he's going to really come off of this at this point. He'll look really weak.
Yeah, both of them don't want to look weak, right? So there'll be something that I just can't believe.
Well, China doesn't care, though. Frank, China doesn't care. President Xi is in for life. He has no elections anymore. So he has no political capital that he can lose by doing anything. People may hate him. They may throw lo mein at him. They may, try to assassinate him. They may do something terrible. They may call him name, but it doesn't matter. He's in for life.
Yeah, no. Look, all good points here. It's going to be interesting to see what happens. But again, one of the things that we touched up on, even if there is a tariff deal, guys, you have to understand that one of the biggest risks right now, I believe, and I think you do too, based on what you said, it is a political risk here. Not getting stuff done. You have Democrats and Republicans that absolutely hate each other. Even when you talk politics among your friends, it comes to like a fight and a hate, and that's being controlled by the media, and you have to hate the other side. It's so extreme right now. But at the end of the day, nothing gets done. Even if Trump loses the election and you have, Biden who wins, who's in a lead right now, the same thing is going to happen. This isn't a Republican or Democrat. This is a thing that there's no negotiation. If there's no negotiation, that means there's not going to be any reforms on banks, which, the balance sheets are stronger than ever. They're not allowed to lend money. So what are they doing? They're buying back. Citigroup's buying back 18% of its float over the next 3 years because they have so much cash. They're not allowed to do anything else with it. They can't lend it based on the current laws. Right. And so you're looking at none of that's going to change. Infrastructure. There's not going to be an infrastructure deal. This has serious impact to people's portfolios. And I would say like 90% of the people out there at 401ks are really not positioned for this because This is a much different political environment. They always argued for decades. They argued. At the end of the day, they go out, have a drink, have a shot, and be like, okay, let's now. I mean, there is hate
hatred, absolute it's to the core. It's so deep, the hatred right now. And it's really sad because it's really that's a big issue, Frank, where you're really putting a wedge between people. I mean, I know people I've heard they're not friends with other people anymore because of who they believe in should be president of the United States. That's just nuts.
It is crazy when you think about it. I mean, if you're an actor and support Trump, you're going to get blacklisted. I mean, and if on the other side too, it's insane. Like the Fox business, and again, it's both sides, guys. Here, I don't care who you like, who you vote for, whatever. But there's things that Democrats going to do, you're going to like, and there's things that Republicans are going to do, you're going to like. But now it's no matter, even if it's a good idea, you're conditioned to hate it, no matter what it is.
And that's not good. Crazy. That's good because nothing will get done, and markets like when Congress and things are not getting done, because the more the things stay the same, the better. But no infrastructure deal. I know we need infrastructure, but where were we going to get the $2 trillion from anyway? That was a whole different discussion. But with the election cycle, you would think there's going to be a lot more potential volatility going in. I mean, right now it looks like we have 75 Democrats running for president. Yeah. It's crazy the amount that we have in there, and it's just what is going on in this realm. And I think that was the whole. And who knows where we're going to go with this investigation by the Democrats into Trump, and where this whole Mueller investigation is going. But I think some of that is temporary. I think we really need to look at the impact of how all of this plays into earnings, the uncertainty factors, and how the global backdrop is so weak right now. And you have to wonder, with our multinational companies in the United States, I think 40% of all profits for the S&P 500 comes from overseas. Is that going to become a problem? Again, that's why I think it's just a good idea to either, I'll use the word de-risk. I'm not going to say lighten up. I'm going to say de-risk into areas like some of the more higher dividends. Ford, which we talked about. Ford's doing a massive.
We didn't talk about.
You mentioned the word.
I mentioned a little bit. And I was going to bring that up as the last topic because nobody likes Ford. And the fact you like Ford at 6%, which I love, by the way. When I hate that's why I'm saying, guys, be careful shorting Tesla, because there's not a person on the planet that likes it. And usually when you see that, it's very dangerous, right? Usually the other side happens. So with Ford, nobody really liked the fact you like him, say it as a positive. But why do you like Ford?
I mean, it has a 6.5% or 6.25% dividend, which is interesting. I don't think there's any real risk of Ford having a dividend cut. I think the question about autonomous driving, that under 25 aren't buying cars as much anymore. I think the whole issue of the 7-year lease terms that were entered into a few years ago that I knew was going to slow down the possible sales of cars, that's starting to wear off a little bit. They have good utility vehicles. They're doing a massive, just an incredibly large expense cut across the board. I think it's going to save them $600 million per year, $600 million a year in cost cutting. So I think that, when we're looking at this and you look at the stock chart and you look at, the fundamentals are okay. I mean, it's the car companies. So I'm not thrilled. I'm not like saying, oh my God, this company is going to take over the world. No, not at all. But in a de-risking environment where we have a decent dividend, we have a stock chart that looks like it's pretty much obliterated. Where's it going from here? Hasn't really come up from wherever. And they're doing this major cost cutting. I just think that if they get back in their groove a little bit, there's some good upside there.
Yeah, and guys, cost cutting is such an amazing thing because it goes under the radar. Because cost cutting, when they cut costs, it goes directly to the bottom line. Directly to the bottom line. So that companies usually cutting costs because things are bad. Now, if they're cutting costs and then they're able to turn around operations, you get like that double impact to earnings that usually blow out estimates. It's hard to predict because it takes long, and that cycle can last 3-4 quarters. For IBM, it lasted 20 quarters, 17 quarters before it finally turned around. But when it does turn around with all the cost cutting going in and that money that they're saving, and then become more lean, and they finally figured out, hey, you know what? Let's get into the businesses that are growing. If you're technology, let's get into AI. Let's get into, data analytics. Let's get into social media. So you're getting out of like servers and things like that. When you're able to transform your business, I mean, those are companies I like to look at a lot. But it'll be interesting to see if they could actually turn operations around, because expectations are really, really low for Ford.
And one more name I'll just throw out there. This is kind of on the opposite side of the spectrum. Something that, if you haven't experienced this, everybody has. But, the world of paper has been turning dramatically, of course, since the computer generation, right? Who writes a letter? Except the only people that seem to write letters these days, actual letters, and send them somehow, are the heads of state that send it to Trump, glowing letters. Yeah,
or inmates.
Inmates, yeah. Right. But one of the things we had was email. Then we had some security issues on that. Then you had some forms and all that. DocuSign, really cool company. We use that for our business, and I looked at it very closely, and this is really revolutionary in terms of cost savings for your office. And it's like anything else. You need to get seats. You need to have people in your office be able to use these things. And once you get on DocuSign as a business, I don't know how you're going to get off of it. The thought of all the templates that you build, all the automation that you build into your CRMs and things like that. It's just one of those companies like Adobe, a subscription-based, software as a service type of situation where you get on it. And how would you ever, why would you ever give it up? It's $40 a month. Why would it, per person? Why would you give it up? Or your Microsoft, well, that's the OS, but these kind of programs and these kind of things that are so helpful, even if I only did 3 documents a month, the ability to push a button, send it to a client, have it come back to me, rather than print it, send it in the mail, remember to get it back, track it, get it back, scan it, send it back to them as a copy securely through some kind of secure system or through the mail, and then file it. I mean, the amount of time that takes versus, sounds like a DocuSign. Are we being sponsored by DocuSign?
Keep going, because it really is. It is amazing. I mean, I used it for our Curzio venture opportunity. So we used it for basically for our token. And when people signed up, and everything was a DocuSign.
Right? Right.
It's amazing because now you read everything. You just click it, you sign it, you're good. Book it. The contract sent us an email, but it just makes things so much easier. It's again, it's something that if you use, you're not going to get off. You're going to continue to use. I don't see a ton of competitors. There are some popping up here and there, but DocuSign just is really controlling that market.
Really impressive. Really impressive.
It is a great company. Really, I love just using a product that actually is amazing and it works and it's awesome. And yeah, I use it for our business too. So absolutely.
And this is one of those that I have companies that I call sticky, right? The concept of a sticky company. Now, if employment drops, if the economy goes into a recession, these companies will have problems, no question about it. But in the normal course of business, these sticky companies where it's like the last thing, it's not like I'm looking around my office during really hard times. I'm like, you know what? I'm going to cut back on this cost. I'm going to cut back on that cost. DocuSign would be one of the last things that I cut because we use it so regularly, and it makes it's so much cost, creates so much cost efficiencies. So sticky companies. I like sticky companies.
That's all. You gave us a lot of names there. So let's finish with this. Okay. So as we talk stocks, talk the economy. Let's talk about fishing, since you go fishing a lot and you have your boat and things are great. Talk about that, because make everybody jealous, because all the time you send me pictures of you with these big fish and no invites. I'm still waiting.
No, you're always invited. But I actually caught a record small mahi-mahi. It was about 8 inches long. Mahi-mahi, one of the fastest dolphin, one of the fastest growing fish in the ocean. They double their size in every month or something ridiculous in the summer. They eat everything. They'll eat their own. But we caught this little mahi, but we caught some other big, we call them reef donkeys, which are these amberjacks, which we go down deep, about 200 feet. You start jigging a little bit, and then all of a sudden you hold on for dear life. Seriously, for dear life. And by the time you bring it up, you're like, I don't want to do that again. And then you do it again, and you're like, oh, this hurts. These things weigh, 30, 40 pounds, but they somehow, they're so strong. These particular fish, they just drag you down to the bottom, and just look it up going, you can't pull me up. We snap like 5 lines of these guys. But fishing's good. A lot of fun down here in South Florida. You're always welcome to come on the boat and spend some time. So open invitation. You'd never even see my new office. You got to see the new studio we're building, a video studio here.
I'll definitely make the visit. You're not that far. And yes, I travel down to South Florida a lot. So it's a few-hour drive for me. Now, to finish this off, Andrew, listen, if anyone wants to learn anything or find out more information about you, how can they do that?
You go over to thedisciplinedinvestor.com. Of course, the Disciplined Investor podcast also on the weekends that we have some great guests this week coming up. John Markman. We had a Fed Insider last week, and we have some great guests lined up as well. But you could also do our Friday pre-market webinars that we do through Trigger Charts. Trigger Charts is a company that I founded that does trading algorithms and indicators for TradeStation. And we go through from 9 o'clock to 9:45. Go over to triggercharts.com, click on that. And actually, I don't know if you know this, Frank, but we're the #1 highest rated in the entire TradeStation trading app store. Very popular product. Yeah, very cool. So you go over to triggercharts.com and sign up for for one of the webinars that we do on Fridays at 9 in the morning.
Sounds good. So, Andrew, listen, as always, thank you for coming on, especially today. You're supposed to come on yesterday. My flight had, delays and stuff like that. It took an extra day. So I love the fact you're flexible.
How is your hangover, by the way?
Oh, I wish it was a hangover. I wish it was my daughter getting food poisoning, which I explained in the opening.
Yes.
Kidding. The very last day. Yes. She had to go to hospital 24 hours and we had to change everything. What a nightmare. But the trip was fantastic other than the last 24 hours. But yeah, it was, thank you so much for being flexible. I know my guests love you. And guys, make sure you check out the Disciplined Investor podcast. And I will, hopefully you join us again soon, bud. All right.
I'll be there. See you soon.
You got it, Andrew. Thanks, buddy.
Good show. Bye.
All right, guys. Great stuff from Andrew. Covered a ton there. Man, he shared a lot of names. Last time he was on, he's like, I don't know, we share a lot of names. This time she was, shared a ton for you. I like his screening process. Those 30 companies, he shared some of those. So again, that's a starting point, right? Just start looking at some of those companies he mentioned. Whatever it was, Visa, Intuit, bunch of companies, Cobalt, and make it a starting point. Say, hey, these companies have strong growth. Their stock prices are doing pretty well, still holding up well. Again, the market's down less than 5% off of its highs with all the risks going on. These guys continue to grow earnings, and that tariff risk comes off the table, which is a high probability, I think, unless Trump wants to lose the election, to figure something out. And China wants their economy to crash. I'm sure these guys will figure something out. And, a lot of those companies are going to see probably nice pops from here. So just, again, starting point. That's what you want, a starting point. Dig into the research. Maybe insiders are buying. Maybe you're finding something that's not factored into estimates, but that's the starting point. I want to give guys on here for you that are going to throw tons of ideas at you. And Andrew's one of those guys, and I know that's why I get the best feedback when guys like Andrew is on and Job Treaties and just guys that can go anywhere with the markets. I know you guys love that. So this podcast is about you, not about me. So let me know what you thought. Frank@CurzioResearch.com. That's Frank@CurzioResearch.com. And guys, next week, I'll have a great educational segment for you, which I wanted to do today, but our interview went well and we covered a ton and gave you lots of ideas. So we'll be back on schedule next Wednesday. Again, my apologies for being a day late, but next week we'll publish Wall Street Unplugged on Wednesday, on time. Everything will be cool. So guys, thanks so much for listening. Really appreciate all the support. I'll see you in 6 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.